Hello and welcome to the update from Wealth of Wisdom. I'm Vivian, and I just want to go through a little bit of what's been happening this week and what we might expect as we move forward. So let's just share straight away and have a look at the charts. So we can see in general terms again the general downward trend of Bitcoin, and just to touch on, I suppose, what we saw at the end of last week. This arrow here, this first arrow, was continuing the trend where each high was lower than the previous, all the way down, all the way down. And this lower high would follow that general trend. And likewise, we have low, a lower low, lower low, lower low. So we had that general downward trend for Bitcoin. But we've seen following this arrow, the second arrow shows an uptrend in the low. So now we had a higher low, which is a positive sign. And then we were keeping an eye, on the first arrow, where the second arrow get higher and create a higher high. And of course, we did. So we've had a higher low and a higher high, which would signify a reversal in trend and the potential that Bitcoin could start moving up from here. Where we're at right now is, of course, it's retraced a little bit as you would have expected, and as predicted last week. But it's how far does it go? Is it starting to put in a low here? And if it is, that would be another higher low, which would be very positive to the market. However, my expectation is that this continues in a downward trend for now, and it's how far does it go? Does it bounce off this line of support? Can it hold this previous low? Because if it were to go lower than that low, we're back into a downward trend, or at the very least, it's canceling this reversal, which would indicate upwards from here. So if this gets below this, which is in around the sort of 52,500 mark, then if it goes lower than that, then it breaks this reversal trend, and we are, the upward trend is broken once more. However, if it was to hold, that would be it would be consolidating the idea that we have trend reversal and Bitcoin could make a move and maybe attack all-time highs. So that's the general gist. Again, if we just close in and go on the 4 hour, again, we can see, it's had a significant pullback again, as you would expect it. That was sort of as you would have thought after that putting in that higher high. Some thought it might have got a little bit higher than it did, but it ran out of steam, and now it's on a downward trend again. But why? Many people put it down to, of course, what's happening in the East, or the Middle East, where you have a major attack into Israel from Iran. Many expect retaliation and potential, this whole thing just growing and growing and getting closer and closer to the potential of a World War III, which of course is not good for absolutely anything, and of course worse than of all for the people in those areas. That's the biggest thing. But if you look at it from a market's perspective, uncertainty is always negative for risk on assets, whether that's the stock market, crypto, or otherwise. And of course, this is creating massive uncertainty. Add in, the uncertainty heading into the elections in just over a month's time. And there's plenty of uncertainty on the table, and markets don't like uncertainty, and certainly risk on assets don't like uncertainty. So then you hear, the likes of Thomas Cook of Apple, CEO, selling $50 million worth. And many of the biggest CEOs of the biggest companies around the world have been taking a lot of money off the table. And including, of course, Berkshire Hathaway are now in their biggest cash position that they have been in years. In other words, they've sold out majorly out of a lot of their positions, including banks. And, is it that they see and know that something's coming? They're selling out of their shares in preparation from a drop from here. There is an awful lot to suggest that could be coming. The numbers in the US, the numbers in Europe and China are not positive. It doesn't show a strong economy. Though in America, they keep telling us that the economy is good, that jobs are strong, and that their fighting inflation has been won. These things can turn very quickly. Just a few days ago, the longshoremen in 36 ports on the East Coast, going from Boston to Houston, went on strike, looking for, I think, 77% in increased pay. And all these harbors were shut. And about half of all imports into America come through those ports. If that was to maintain its position over a longer period of time, then what would happen is you have similar demand inside in the US with about half as much products coming in. Products in turn will go up in price by true supply and demand. That would increase inflation, and then you would have the Fed in a really difficult position where if inflation is going up, but the potential problems for jobs, for the jobs that want to reduce interest rates to fight inflation, they want to increase interest rates or at least hold them where they are. And then they're in an impossible position. But any as it happens today, that's got resolved. They've got 60 something percent extra. Nice raise if we can get it. And that's been resolved and it's all open again. But the main point of that is things can change really quickly. And so while we're trying to, have an idea of where the market's going and what might cause that, these things can raise our head, really quickly and have a huge effect. Again, if you go back, I think it was the start of August when this whole carry trade, the yen carry trade came to light. There was a huge reaction in the market, and an awful lot of people would have been completely unaware, including myself, of this whole yen carry trade and the risk that it holds, that it held and still holds. And so these things can change really quickly. And so while you can have a thesis on what you think is going to happen next in the marketplace, whether within crypto or the market in general, of course, that can all change really quickly. And so, when you're looking at potentially investing into any risk on assets or any assets at all, it is good to try and take these into account. But no matter how much research or what opinion you may form and how solidly you believe in that, it could change really fast. And so I think most people here believe or understand my belief. And in general terms, I think the overall crypto space couldn't be more positive. Again, a couple of new things. Bitwise have now filed for an XRP ETF, and Ripple themselves have got regulatory approval in Dubai. So two really positive things there for XRP Ripple. And on top of that, then you have the former Chinese minister saying that crypto is a crucial aspect for the development of an entire digital economy. The US has embraced it. Therefore, China need to relook at its, how crypto is, the policies that they have in place, and he moving or saying they should move towards making it easier to do crypto business in China. So again, really positive news that both the US and China are starting to try and move towards making things easier, or at least putting in the proper rules in place for companies to follow for them to develop and expand what they're doing. All very positive stuff for crypto. On top of that, you have the likes of Visa, who are launching a platform to allow banks issue tokens. And then, of course, on top of all that, you have the likes of the US dropping interest rates, by 0.5%, Europe doing the same, China doing the same. And in fact, China has also pumped billions into the banks to try and stimulate their economy. So there's an awful lot of money coming to the table. And usually with liquidity comes a really positive feel for, again, risk on assets like the stock market, like crypto and Bitcoin and so on. So we have a huge, what you might call, tailwind behind the overall crypto side of things. And so you would say, okay, this is absolutely lined up for crypto to go on, the bull run that many, many people are expecting. And I expect that. I believe we are going to have a phenomenal bull run. But when you look at the macroeconomics and look at the economies of the world, and again, you go back to the likes of the US, why did they drop by 0.5%? If they're saying the economy is strong and they've got their fighting inflation under control, why drop by 0.5%? Why not just 0.25? And is that because they can see the cracks that are there? Can they see issues with banking? Can they see issue with, consumer confidence, which seems to be really low, considering they're saying that the economy is doing so well? China, again, like I said, reducing interest rates, pumping money into their economy. Europe also reducing interest rates. Why are they all doing this if everything's hunky-dory? So it just seems to me that the people in the know, including the CEOs of the biggest businesses, Berkshire Hathaway, selling into cash positions, why are they doing all of this if they truly believe that the US economy is doing so well? And therefore you would expect that the markets would do so well. Why are they selling out of all these companies? And so, as they say, don't do what they say, do what they do, follow what they do. And most seem to be selling out. Why is that? Why did the US drop by 0.5% and not 0.25%? What is it they know that we don't, or at least that they're not saying or they're not admitting to? I mean, to me, there appears to be an awful lot of cracks in the banking system, in consumer confidence, huge, debt all over the world. US 35 trillion, growing by a trillion every 100 days. Their interest rate payments are over 1 trillion now per year just to pay the interest without paying anything down. Their actual debt is increasing on a continuous basis. If you or I were running a business and doing that on a daily basis, weekly basis, monthly basis, you would be closed down. You would be bust. But yet this economy is just printing, printing, printing more and more. So, the cracks appear to be there, but then you look at the stock market and you go, everything's amazing. So something doesn't add up. And that's what gives me the concern, because I look at the crypto and I go, it's unbelievably positioned. It looks like it's ready to absolutely rock and roll. And then you have all this macro data that goes against that. And so for me, in summary, it's like this. I believe we're going to have an unbelievable bull run in crypto. But I also believe it's highly likely that there's a recession on the cards. We might already be in one. And I'm referring to the US in this stage, not that most of the world, I believe. Or it's coming at some point in time in the near future. Now, of course, predicting recessions, you're always going to be right, because eventually there will be some recession, whether it's in a month's time, a year's time, 3 years' time, there will be another recession. So I'm not trying to say, oh yeah, I suppose, look, it's easy. It's easy to predict a recession and it's easy to predict a bull market. Timing is the key. And that's where it's getting increasingly difficult to see a path forward here as to which will come next, because you could have figures that come in over the next few weeks and months that would say we're in a recession, or it's absolutely inbound. Or it could be that that's all staved off. They print an unbelievable amount of money. They reduce interest rates rapidly. And we see a huge bull run market, and the recession follows. So which comes first? Recession first, big drop in the market and then recovers into the biggest bull run we've ever seen? Or do we get the bull run first and then recession? And that is the detail. That is the point that's hardest to negotiate. And of course, when you have the uncertainty for the next month of the elections, well, at least you could say, okay, the uncertainty in that area should be done and dusted within a month or so, let's say 5 weeks. But then you have what's happening in the Middle East right now, and tensions elsewhere in the world as well. Many people talk about the potential for, World War III. Of course, that's going to, have a massive, massive effect on the overall. So for me, I think this is where the whole DCA and doing your research really comes into play, where you don't get too, completely out of the market, and you certainly don't get completely into the market. I think anyone that's been following what I've been talking about for any length of time will know my gut feeling is we need to see this big pullback first. That may never happen. And people need to be really, I'm very clear on that. That might not be what happens, but it's certainly my number one case as to what will happen. I think they'll reduce interest rates enough and print enough money to stave off a recession for now. If they do that and there's a positive feel in general, then the bull market kicks in. We have a big run, but at some point in time, the numbers will come home to roost, and the issues and the economies will come home to roost, and we see that recession. And of course, that will be a significant negative to the overall space. So that's it. That's my general thoughts on that. Again, you can see things like Amazon are now firing 14,000 managers as well. Trying to save 3 billion doing that. There's a lot of news out there. It's very mixed. Be careful how you go. Watch the space, and we'll keep you up to date as things happen. Talk to you soon.